All right. All right, my listener, this training is very crucial. This may be the last training I'm going to do this year for us. There is nothing that I was supposed to teach us that has not been taught. So I would love you to pay very rapt attention to this, like a summary of what you need to know in your trading, irrespective of what you want to trade, all right, irrespective of what you want to buy. And so you want to learn more about setup and all of that, you can go and study through all of those ones I have done. So please, I love you to pay up attention. If you need to take your pen and paper, now you can pause the video and go back to take a pen and paper or a jotter, wherever. So you want to watch this on your laptop and take notes on your jotter with your phone or whichever one you probably want to use to jot. Now, but I'm going to go into theoretical aspect first, which I've always been teaching, and the practical segment, which I've always been emphasizing. Now, so let's quickly looking at the market itself and what you are supposed to look at. I've taught some things about this passing. If you do not, if you not that if you do not have, if you've not opened this because I posted it on our forum, those of you on inner group and those of you on Plan B Express cash flow solution. So this was posted. I've discovered that we've not really paid attention to important things. Now, what is it? Important concepts that are helpful for beginners. Take note. Engulfing candles. Look at what it is. When one candle completely swallows the previous candle, it's a sign of market control from the previous trend, meaning market was going up. All of a sudden, there is a candle that closed negative against the up move the market was moving. It's a sign of something is cooking for a control takeover that seller have takeover from buyers. Very important. Take note of that. Market structure, higher high and higher low are bullish market, and lower high and lower low are bearish market, meaning structural change. Structure breaks. When market breaks high or low, that is a previous high or previous low with force and leaving behind an imbalance shows that the market is likely going to continue in that trend direction. All you need to do is to come back to wait for it at the balance it left behind to come and fill, and then you take an entry. So please take note, it's very important. So market structure shift. The occurring market actions when price breaks a significant swing high or swing low, indicating a potential directional change in trend. Fair value gap. Of course, I don't need to go much about this. So read through all of this. This is most more powerful entry model in trade, both in Bitcoin, in gold. And if you have been following us, you understand that swing point, which called power of three, swing low, swing high, and swing low, forming power of three and decision-making areas for traders on precision. This is my most favorite entry model aggressively or on in condition. Swing failure patterns. Market trade to a swing high or low, but fail to sail through it shows a market reversal. That is a sweep of kind of liquidity. Or fail rally, not to get to the previous swing high or swing low. So blocks have series of block, order block are the most things you are going to make use of. So, but go through this and study what it means. And of course, I've taught them before. So, but you want to just have a refresher course. This is very crucial to your trading risk-reward ratio. Minimum of 2-to-1 ratio. Strive to be hitting 3, even to 10. The risk-reward ratio compares potential profit to potential loss in trade. So it depends on how you understand your market structure to be able to get this. Now we're going to go. Now, you know, our style is called Plan B Express or Felix P and L trading strategy, which means price action and liquidity concept strategy. So price action is the fundamental of your trade. So pay attention. Is the fundamental of your trade. And the basic ones we're going to be working on, there are many of them. And it's the first one is candlestick pattern. There are few candlestick patterns that are very important for you. As a beginner, then over time you can learn more to understand others. But significantly, I've mentioned engulfing candle, the pin bar, and other related one. But where they come out from is where now matter come to be very serious. Market structure, it's what creates a trend where you have a swing high, a swing low, a swing high, a swing low, or a swing high, a swing high, a swing low, a swing high, or a swing low, a swing high, a swing low in that dimension. So then support and resistance is very important. So I call this one an overlap. So we can have an overlap in a place where market return back. So you have to understand support and resistance. You won't trade support and resistance like the conventional trader because you have understanding of liquidity. And so for that, you will trade it differently from how people trade it. Then you have demand and supply zone. So these are different concepts entirely that it's more maybe several touch points. So several touch points confirm demand and supply. And apart from that, aggressive move away from a particular point define demand and supply. Do you understand? When there's an aggressive move from a particular place, which is similar to order block, but not order block. All right. So that's what we call demand and supply. Then you have trend and trend line. So of course, when the structure is moving in a direction, either up or down, you have an imaginary line you actually drawn to connect from different swing point to another. And it is said to be the first hit, the second hit, the third hit. If it gets rejected, it bounces faster and more larger, expanded than it is. Now, liquidity concept, you are going to be observe. So these are places people place order. So when we talk about liquidities are order areas where potential orders are placed, an institution want to drive towards that point, price are driven towards that point because behavioral in nature and want to capture this. So like daily high and low, you understand that part of my trading strategy, I'll say mark the previous high and low. So because these are liquidity region. Then internal liquidity, which has to do with swings high and low, equal high, equal low, triple down, triple up, and different, then even trend line swing point are internal liquidity. External reference point, which are break of structure, market structure shift, order block, FEG, which I've talked about inside it. Supporting tools. Maybe if you are trading on like you're trading trading mastery and they give you what is it called? This tool, what's this trade locker. You have a trading view there, you can plot as much as you want and all of that. Fibonacci retracement, Gumbox, they're very important for us to plot in where we expect market may retrace back to. So other related indicators like Fluid Trade, PA, that's price action toolkit, then Plan B Express magnet, that is buy and sell magnet and all of that. What is your focus? Your trading focus, number one, is to find an A+ setup to deliver minimum of 2 to ratio 1 risk reward. Now let's go. All the summary of what I've just mentioned. Now, this is Bitcoin. There are different currencies. So I'm going to take Bitcoin. All right. So I'm going to take Bitcoin. So Bitcoin is back to $90,000. Is it not super amazing? A lot of people never imagined this could happen as fast as possible. So I want to take Euro USD that poised a lot of things today. And somebody reported to me when he entered, actually he entered at the wrong point. And why? Because he was actually not looking at the market properly. Now, you want to enjoy market. If you really want to be serious with your trading, that is going to be sacrificial, but I don't think it's too difficult to go by. Now, so the first thing you have in your mind, what am I supposed to look out for? I want to find a trade as I come into the market for the day. And I always say that if you want to get it very good, maybe wake up when market just closes, market just open. So there's a previous day close and there's a previous day open. So it makes a lot of sense. All right. So now, if that is the case, this is what I'm going to do. First, you want to identify a structural bias and trend bias, structural and trend bias. So that's the first thing you want to identify. Okay, what do you mean by that? I've done this before. I'm just doing an aha effect. So structural change, structural and trend bias. Now, this can be done. So the first thing you want to do is to go to your daily time frame, and that can be seen as simple as possible. How? Now, this is a market. Now, you don't need to go, even if I go through all this previous time, it shows that this market is an uptrend. Do you get it? If I even go to all this far. But I'm not going to go, I'm going to go with current trend. So I'm working with this current trend. Now, working with this current trend, meaning that if I even mark something, meaning that this current trend have a long journey to move. And what's the journey? Over here. Let's go here. So if I even mark this point, so this has a long journey to go, right? Yes, that's what it means. It has a long journey to go. So working with this current trend, the market is an uptrend. How do you miss an uptrend? Very simple. That's where we talk about, so price action, all right? Price action of market structure. So the market is uptrend. I don't need to draw a trend line and all of that. The reason is very simple. I said higher high and higher low is an uptrend. Higher high and lower high and lower low is a downtrend. So what's the meaning of that? Let me take a tool and show you that very fast. So pay attention and follow what I'm doing now. So it's very simple. This is market begin here, right? And it move up to this point. And it came down here. And it move up to this point again. And it came down here. And it move up to this point. Now it's coming down. So let's pause here. Now, pausing here means that now, other things we've described that you need to know, understand in your price actions. We talk about support and resistance, demand and supply zone, and all of that. So here is a swing low, and here is a swing high. Here is a swing low. Here is a swing high. So let me down do practical with you. Now, not all the time you can find a textbook format of this structure. No. So here is a low, and then up there, it's a high. Okay? So here is a low, here it's a high. Now we have another low here. So this is another low. Then we have another high here. So then we have another low here. Are you following now? So if that is the case, look at what happened. Now, if I have discovered that the market is uptrend, okay, and why am I looking for uptrend? So the market is uptrend. The next thing I need to check is the recent break of structure, POS, recent break of structure. So now, ordinarily, if when I come, market was here and then start moving here. Now, this is where most time we make use of Fibonacci tool. So let me take this now. So you can see this is an uptrend. Can you see? Higher high, a higher low. So this means this is a low, this is a high. But this market came down to this low, but never got to this. That means higher than this, but lower to this. That's what I mean by higher low. And it kept doing that. So now, this is what is happening. So quickly, if I want to trade this market ordinarily, maybe I'm waiting. Look at the number of days that this one has actually traveled. You can still repeat it in 4 hours. You can repeat it in 1 hour. Okay, so understand this, but I love to go to 1 day first. Now, if I take my Fibonacci retracement and I take from this low, you must find a resting low and a resting high. So I will take the market to this point. So what exactly am I looking for? My trade, usually, I look for market to return back to a discount level. If you are buying, let market come to discount. Don't just jump in. Okay? So you need to buy, but at a discount price. Do you get it now? So that's why when the market is coming here, so market has moved here. Oh, where will I buy now? You need a pullback of the market. And I've told you there are 3 ways of buying market. 3 ways of buying market are this way. 3 ways of buying market are number one, ways of buying market. Number one, pullback or retracement. Number two, breakout. and retest. All right? Breakout and retest. Number 3, reversal. So at the end of a particular trend, so like this market now is a reversal, there are things I would do to find an entry somewhere here, but it's a job for another day because you need to understand the fundamental of your market. Now, so here, the market, I was targeting to see when the market is going to come down here. So that's why waiting is trading. So probably you have marked this point this way. Okay, now if I mark this point this way, so that means I'm waiting for this. Now, this place you mark, number 1, this place you mark on 50, that is discount level, is called area of focus. Now, another first area of focus we're now going to have, you will now see it align, that is an overlap that happened here. It align here. What align here? So this candle, that is the last bearish candle before the bullish takeover for us to have this reversal, it's called order block. So this order block is a bullish order block. So I can label it this way. I normally label it this way, and I'll put this way, and I type to differentiate what I'm doing, 1D, all right, minus, all right, UOB. That is 1 day, plus, that should be plus. This is positive, right? That is positive. That is bullish order block. That's how I delineate my marking. Now, so that means in whichever way, both the Fibonacci retracement and the order block market actually overlap to that. And another thing you will now spot, this is an A+ setup. Another thing you're going to spot is this. Let's take this. You can see how many things I spot here. You see this one I spot here. Now, this is, okay, so let me change the color of this one I just drawn here. I'll change it to black. All right, so let's change it to black. All right, so that point here, so let me type it so that you can understand. Please stay back and watch this video again and again. This is 1D fair value gap. Is that getting it? Very simple, okay? This is 1D fair value gap. And go back to that note and study what is fair value gap. So I don't want to over-label myself over here. Now, so if that is the case, that means in this day, I'll be waiting to find an entry here. But there's something again. This is a swing point. Why is it a swing point? Look at, this is a candle. The first candle is accumulation. Then it sweep the liquidity of the previous candle. And then even if you didn't take trade these days, the third day, you are going to take trade. It's just to wait for a pullback, and then you are entering the market. And where should be my target? This high. Okay, so now leave that. So the market has done what it has done and then returned back here. That is one. The market again broke structure. So you are taking this way, for instance, let's say fib retracement from this swing low, not from the other one again. So let's take this. That's from this swing low here. Please pay attention to this training. It's very, very important. Now, this one didn't get back to that point. Now, what really happened? Why did this one not get down to this point? Now, you are implementing different things that are your price action. See something here. Every point that the market got to before starting moving otherwise is called a support or resistance. All right? And this is the same thing as supply zone, because this is the last point before market triggered down so massively. So you have marked that point, that market, whatever. Now, so all of these points are my area of interest. Are you getting it now? Fantastic. So if they are my area of interest, no problem. Then the market has traveled up and you're able to find. I'm driving somewhere. Now, that means this market is still bullish. When will this market no longer be bullish? On a higher time frame, you see this low that gave birth to this high need to be broken. Oh, yes. So if it's not broken, then all of these are just continuation. So what happened? When I come and I saw this market here, I will have sold, and I'll tell you how I will sell. Now, if I take my fib retracement from this swing high, a swing low, to this swing high. So can you see something? So now your potential entry point is anything from where? from 50 to 75. So look at it. Now you have another block seated here that you expect the market to come to. Can you see now? Just like this similar alignment. So now this is very fantastic. So you that have come for the day and want to trade, you are not going to enter the trade just immediately. You are waiting for the market to pull back and give you a discount. That's what so a buyer look for discount, a seller buy at a premium. So there you have done this on daily time frame. So I can step down to a lower time frame. Now, lower time frame from 1 day, so I'll probably go to 4 hours. Now, if I go to 4 hours, I could refine my structure again. And how will I refine my structure? You begin to see more of this, a break of structure, this is a break of structure, this is a break of structure, okay? This is a break of structure, okay? So now the market move, this is another break of structure. Look at it here. On 4 hours. So this is a break of structure. 4 hours. So that's a break of structure. Can you see that? Now, as a break of structure, so you're looking for another block at different places. So probably this is going to form another area of focus. Have you seen how these guys align with this Fibonacci retracement of your what's it called? Of your 4 hours, of your daily time frame, sorry, of your daily time frame. So it aligns with it. Now you go to 1 hour. Right? On 1 hour, it's still the same thing because, all right, so if you look at on 1 hour, we have a break of structure here, make a lot of sense. And then this was just a sweep. So this is the main break of structure. Now, on this main break of structure, you still have different places here that the market, but look at what happened. These are liquidity. All of these things are liquidity. So you expect the market to actually travel down, even though down to another point of area of interest. So if I mark this, that will align with this. So you just have so many alignment that the market could travel to, but you want to be careful too. On the same vein, the market move. Now, there's something that happened here. When this market did this, it's another high that was swept and creates a reversal. I think if I perhaps have gone there. So now we're going to 30 minutes. So 30 minutes created a different thing altogether too, right? So 30 minutes is similar. You have these, and then the market structure shift. This is a shift. Okay, look at it here. This is shift. So this return back here and shift, and then we travel down to this point. So that means I will have been selling. So let's go to a far lower time frame. Now, far lower time frame, which is 15 minutes. So you have here to form the shift indeed. Then you have another point here. So we take this one as the main shift, just like in that 30 minutes. So that means in this shift, so you look at the market to plumb back, all right, before selling down, but it broke away. Now, there are more detailed explanation about that. I may not really have time to explain now. But let's go on 5 minutes. What really happened was this, very simple. This is a break of structure. So now this is the shift ordinarily. So, but we have another point here. So this is a shift, and you expect the market to return. But there's something that happened here, because there was something that we saw that I didn't even do at the beginning of this market, which I'm going to show you to do. Now, this is a swing point. Okay, you have to pay attention. That's why I showed you of the some of those important things you need to know. This is a swing point. Now, when this swing point occur, by the time you use our additional tool, you are going to find a sell opportunity. That means you will have sold. First take profit will target here. Now, this is one of the rules that most of us disobey. When you find an entry, your first target, so let's say I found an entry here, stop loss somewhere there, that's about 12 pips. Now, 1:2 was your first target, ladies and gentlemen. Now, if you want to be more stuff, you know that this is kind of sell-side liquidity. Maybe you expect the market to actually take it out or hit it and bounce. That's what your take profit there. Now the market actually broke it, return back up. That is a trade. Remember, you are now targeting somewhere down, and that's how you can roll this market down. So if you look at this, rolling this market down from that point here, okay, let's even say at the close of this candle, and then your stop loss 15 pips and all of that. So if you're going to take it back to as low as this point or far further low, that's going to be 1:5 risk reward, losing 15 pips to make 88 pips. Now, but this is made possible when you pay attention to important information. Now, in 5-minute time frame, market came to this point and start changing. So let's go. How do we go? So all of this. So this is a structural break. So the market has returned, and then we have this break here. All right, we have this break here. So if you have this break here, so what am I going to do? I probably want to wait for a return. And to what extent am I going to wait for this return? I plot my fib retracement. You can see came to hitting back here as a support this time around and align with my 78 region. That's an extreme discount. But let me show you something. What happened? This point are liquidity, this is a sweep of liquidity and tap into what we call fair value gap, and this equally an order block. Can you see now? The market tap into that, and that's where we have this drive. Having this drive, we broke a new structure here. So this is a break, this is the major break. And then if you take from here to here, you can find then another break, and that market has continued to rally up. Now, where are we going to rally to? It's none of your business. What matters to you now is that you have been taking your profit as it presents to you. Okay, so let me return back to 4 hours and daily time frame of what's one of the major things you ought to do, right, when you come into the market, is that you want to prime your market. Okay, so let me remove all of these drawing. Now, so we want to prime your market, which is very important. And that's one of the things I said, what happened here. How do I prime my market? You're going to go to what we call weekly time frame, right? And then turn your chart to a line chart. Okay? So turn your chart to what? A line chart. Very simple. Now, so let's turn it to a line chart. So what I'm going to do, what am I looking for? What I'm looking for is simple. I'm going to take my horizontal line to mark important key levels. So I'll make it more thicker. So I make it what? More thicker. So as I make it more thicker, and then I will, so just change it more to a thicker line. So I take another one to another significant point. So this is a significant point, right? Okay, good. So I move again, probably to find another significant point. Where can I find? Here. So I need a very more significant point that going to align and creates a lot of conflicts. So I think this is touch, and then you are going to have some wicks that touch too. That could make sense. So you can always adjust by the time you find more significant points. Yeah, but more recent time touch point make more sense eventually. Okay, so let me just plot as much as I can. So if I find this one, is this significant? So let's say this one, which one is more significant? Do you get it? Okay, so let's just keep it there. Okay. Now you can always adjust when you find a more significant point. Okay, so let me stop here, right? So let's stop here. So now return back to your candlestick pattern, and then probably go back to daily time frame. So because you are a day trader, intraday trader, so you have to navigate through all of this. Now, so you can see now, so what really makes you to sell from here was the fact that it touches a major key level, which is a weekly key level. Now, buying from here was a part of 3 already, that you go to a lower time frame to find an entry, sniper entry. Now, this is a part of 3, and then this is a part of 3. But the market is still an uptrend, okay? And then that's why you mark this point, okay? And expect the market to come. But by the time you took your Fibonacci retracement, it actually aligned And then when we went back to lower time frame, I think possibly a 4-hour time frame or so, we had, was it Fibonacci? So yes, we had a fair value gap there that the market plumbed back to. And there you go, the market is buying. Please, it's very important. Don't jump into trade without doing just this thing I've just shown to you. It's very, very important. You maximize your trade if you are able to sit down appropriately and do the right thing. So the same thing in Bitcoin, all right? So the same thing in Bitcoin, the same thing in gold and all of that. So look at the daily time frame on Bitcoin. So you probably want to mark all the necessary marking points, right? So look at it. It's obvious that it was a downtrend, but trying to return back as it were right now. So because if you even take a trend line and then you probably want to plot, say, okay, so let's take the here. Okay, so can we find here sometime? This one to the third one was what is massive. So you're actually waiting for a serious major breakout of this, your market. Do you understand? So, but if you look at it now, you probably look at, let's look at this. This is a low, right? So the market will create a high. So you must understand that. So if you do not understand, sit down again and again and watch. So this is a low, this is a high, and then a break of structure, this is a high. Now, if I take fib retracement from here to this swing high, so you can see you're looking at the market to be taken here. Now, returning back to this point now become a support, okay? So it created a support and then came back to it. So here, the market broke this structure, okay? So here, okay, here is actually here. Now this is here. Let's take this here. This is supposed to be here. That return back to this point. Then Y here is going to be here. Okay, so you can see what Bitcoin have been doing, right? And so you come back from that point, and then you have, this is a sweep of liquidity on a higher time frame, because it has not broken that high. And then so market begin to rally down and all of that. So you go to lower time frame, probably you will find your trade. And how will you find your trade? Let's go. Can you see now? So if you look at it here, even on 4-hour time frame was a sweep. So if it's a sweep, what happened? The market sweep creates a market structure shift here. So this is a shift. This is an external move. And then we have a rally back to the other block. And that was a massive sell for you. Now, after this sell, we have another break of structure here. Please, these things are very important. Okay, this is a break. And now, so after this break, you actually, excuse me. So you actually expect the market to rally back, to just a point of interest and all of that. So we have another break. So here we have another break. So this is a recent break. So if that's a recent break, so what you're looking at, say, is here. In fact, all of this point. So are we going to break out of this point? So here you have this, you expect the market to rally back. So the market rally and start doing another kind of change of movement. Here is a low, it creates another high here. Do you see now? It pull back, creates another high here. So that means if I'm going to take my fib level, I'm going to take from here to this point, and the market rally down to this point, and that's a buy. All right, can you see now? So you have to look at the market from the two sides of the coin. So now market had gotten here. What's going to happen? So we're going to go 1 hour time frame. So going back to 1 hour time frame now, it's as if the market had gotten to this other block and want to sell. So if it's going to sell, to what extent it's going to sell, that's what you need to know. So perhaps you're going to take from this high, low, so here to here. So perhaps it's going to go to the overlaps that you're targeting for Bitcoin, maybe 87,700 and this. And this is another block, but this was not broken. And so how long? So the market could push back. Right. See, trading is phenomena. Most time we don't pay attention to what we ought to pay attention to. And that's one of the biggest problems we create for ourselves. Okay, so let's go to 30 minutes. It's not the same thing is going to repeat. That's form a part of 3 on 30 minutes ordinarily. And so we're going to 15 minutes. So you can see that even if this 15 minutes is the same structure you're still having. So it can go complex sometime, and then you just want to avoid those things that are not going to make too much sense for you. Okay. So you can see this is like kind of liquidity void. I think it was news. This was news. So you expect the market to actually correct setback. Now, but this is what I'm giving to you. Understand your price action now so that you can study your market structure properly and don't just buy into. And then when you buy into something, you should know where is the market go. If not, you'll be under pressure. Okay? You'll be under pressure. It's very, very important. So, ladies and gentlemen, go and study this. It's very important. Trade with precision, not guesswork. Once you guesswork, you are going to be under pressure. When the market is going against you, you're going to be under pressure. And I don't want that. I want everybody to really master the craft of buying and selling. And it's not difficult. But if you don't pay attention to simple instruction, you're going to complicate issues for yourself. All right. So watch the video again and again to really understand the markets, the support and resistance, all right, the break of structure, market structure shift and all of that, and then for you to be able to find appropriate entry. You refine market to a very barest minimum so that you will not be under unnecessary pressure. Look at this type of market now. For instance, if I go to maybe you just look at it. This is like liquidity sweep. Start sweeping this so you understand this is red in liquidity. So, all right. So draw liquidity, and then you expect this thing to be taken out too, or perhaps after that, travel up as it were. So if I come to this one, this is daily time frame, or 4 hours, if I'm not mistaken. Yeah, so is it 4 hours or something? So all of these points are like equal low here and all of that. So you expect the market to actually travel down there and sweep the liquidity. If I go to 30 minutes or 15 minutes, you're going to find the same thing. So you expect the market to actually rally back up to this point. But do I need to wait for it there? If I find my trade on time, no, I do not need. Once I find my trade on time, the simple thing I'm going to do is to pack my trade 1:2 risk reward that's going to give me, because you'll be looking at here as a fair value gap that the market was going to travel back to and all of that. Okay, I think this should be enough. So please pay attention, it's very important. I don't want us to miss. Okay, look at Bitcoin now. So see what Bitcoin have just done now. Okay, see that? See the Bitcoin we're just showing now. Can you see? Can you see what Bitcoin is doing now? This is it. So because you really have can you see what Bitcoin is doing now? So imagine if you're here already, and let's go to 5 minutes, perhaps when you find your trade. This is the real power trade. And then take your trade from here, and then stop loss at least just above 1:2 risk reward. Here is it. That's your first target. Yes, that's your first target. It doesn't matter what the market proved to show. That's your first target. Then other target can continue more and all of that. So that your first target will hit. You take your profits and begin to trail every other positions that are left. But this is what killed most of us, when even the profit target that you're supposed to have taken, you don't take it. And number two, where you ought to have entered the market, you do not enter the market. So you are still hanging and waiting. Okay, let me see what the market is doing. That means you really do not know what you're doing. Okay. So if you really do know what you're doing, you're not going to be hanging and let me wait, let me see what's going to do. That's hope. What are you hoping on? So you are not precise. So the precision is very important that you need to play around with. and then work out your modality as much as possible, to find an entry. Look at it now. So look at the trade is going. Just like I've told you, right? Just like I've told you that this is this. Look at it. The market return back here. This is a sweep of liquidity. All right. So then it won't waste you time to deliver your trade for you. And then you'll be fine. You're cool. Right? So look at it. Massive up. And other people will be looking, what Bitcoin doing? What's Bitcoin doing? But because you have a strategy and you already have your expectation, then you just be making out the money. And then people will ask you, how are you doing it? What's going on? How do you know that the price was going to collapse? How do you know that this thing? No, it's about knowledge. All right. And you keep building on that knowledge every day rather than just moving from this instrument to this instrument. Remember, I've told us if you are not a swing trader, don't trade too many instruments. Okay? 3, 4, 5 instrument is okay for you. So by the time this one deliver now, let's look at it. Now, the stop loss 844 point, and then the take profit 1,700 point. Now, 844 point, let's say you use 0.1. So 0.1 is 10 cents. So 844, so let's go there. 844, let's just say 850 multiplied by 0.1. So that's $85 as your stop loss. Then 1,700 multiplied by 0.1. That's $170. So it all depends on what you're trading and perhaps just refining some other thing. So if you use 0.2, that will be times 2. That means about to lose around how much? $100 and something and making $340. I said, no more than that. I think it's more than that. 300, yes, $340. That's cool. Now, but where you fail this is because if you do not plan your trade. Now, if you still go down to lower time frames, or sometimes going to 1 minute can confuse you too much. So you can stop at 3 minutes, at 4 minutes, 5 minutes, and then so that you can get your trade set on time. Once the TP1 hits, you could discover that the market could come down and start adjusting itself over here. So this is it. So please, very, very important. I discover a lot of us are still finding it difficult, making a lot of mistake, entry market on impulse. You don't even know why you entered the market. No. Any trade you enter, you don't know the reason why you entered. It's not good. You must really learn, why am I entering? So what are the factors responsible for my entry? Look at it now. The trade is almost closing. Yeah, the trade is almost done. Oh, yes, it's almost done. That's what it is. All right. So thank you very much. You have a nice time.